So before we dive into this reaction video, I have had some really interesting YouTube comments today from JoJo, and now we've decided to rename our investors. We used to refer to them as investors whenever they put money in our deals, but JoJo has decided that we're gonna start calling them Daddy now. So if you've ever invested capital with me in any of our deals and I call you Daddy, that is why. All right, let's go ahead and dive into today's video. This is a reaction video to Grant Cardone talking about 3 reasons you should be investing in multifamily. I actually haven't even watched the video yet. Rafe picked this out. I'm kind of excited to dive into it, and let's see whether I agree or disagree.
Why do I insist that apartments are the greatest investment of the group?
Greatest investment of the group. That's a little aggressive. See what he
Why
says.
should you focus here for your initial foray into real estate investing? In short, it's because apartments pass a number of tests that are vital to you not having to worry about whether or not you're going to make money in a deal.
I think that's pretty good advice as multifamily being your first foray into commercial real estate investing. It's a very familiar type of asset. Most people grow up in a house. Most people have lived in apartments when they were in college or starting out their careers or lives or whatever. So, I mean, you're relatively familiar with how that whole process works, even though you haven't necessarily been on the other side.
Okay? You're here to win. You're here to make money. I'm all in on apartments for key reasons. First, apartments are real assets. When you own apartments and you own...
Apartments are real assets. So that actually applies to all of commercial real estate and real estate in general. Real estate is a tangible asset. It is obviously something that you want to invest in because even if the market tanks, real estate loses all of its value, which has never actually happened, you still have something physical and tangible that you could at least live in or rent out or do something with.
You own real tangible assets, you benefit from a number of things. One, you benefit from appreciation going forward if you pick a good location, cash flow right now while you sit and wait, and it's more expensive in the future going forward to build these apartments than it was to buy them. Number 2, apartments produce...
They actually just showed the JW Marriott in Nashville.
Produce positive cash flow, or at least they should if you bought it right, if you got the right debt on it, and if you picked the right property.
So appreciation, cash flow, and the fact that the replacement cost is going to be higher, those are obviously great reasons to invest in multifamily. Again, that also applies to commercial real estate. So let's see if he gets more specific on why multifamily should be good, but it sounds to me like he's going really general with his opinions so far.
Property. Apartments produce positive cash flow, which is the holy grail of finance, a concept that very few people ever get right, almost as importantly as inflation. Same thing with cash flow. You're underestimating the value of positive cash flow when you pick a property. It is cash flow that gives it value going forward because 1, you get to keep it long term, and 2, it gives you security when you go to sleep at night.
As an investment, real estate is amazing when it comes to cash flow. You don't typically get to see those same kinds of returns from crypto or stocks and bonds like you will out of real estate. And the great thing too that he kind of glances over, and maybe, again, we haven't seen the whole video, maybe he talks about this next, you can utilize debt to actually buy properties. You can use somebody else's money to go buy that property and then take advantage of the cash flow. So it's a pretty awesome investment vehicle.
Sleep at night. Now, that brings me to number 3. This is called the multiplier effect. When rents rise, if they do in your market, apartment values increase. Look, if you're ready to take the next step and start investing in real estate like a total pro, you have to start with the big why. Why a particular class of asset?
That was kind of a very short, weird cutoff at the end. He barely talked about his third point, the multiplier effect. Really what he means there is that multifamily and all of commercial real estate in general is valued based on cap rates, capitalization rates. I believe we have a video on that. If we do, it's right here. Let's say that your property is valued at a 6% cap rate. When you increase the rents, you're increasing the net on your investment. That is actually multiplying the value of the property because your property is not really based on comps. It's going to be valued based on what an investor is willing to pay for it, which is called a cap rate. So adding $100, let's Let's run the math here. So adding $100 a month on your property, just net, you add $100 a month times 12, $1,200 a year on a 6% cap rate. You've added $20,000 in value to that property just by adding $100 in value. So overall, I mean, the video is pretty short, makes a lot of sense to me. He's making some great points about multifamily. What I would say too though, Grant only covers about 3 benefits for multifamily, and there are far more than that. And not only will they apply to multifamily real estate investing, they will also apply to all commercial real estate investing in general. Check out this video here on all of the benefits of being a commercial real estate investor. This is one of the few videos where we could find Grant not just rambling about nothing, and he actually gives some pretty decent points. If you want to learn more about commercial and multifamily real estate investing, subscribe to the channel.